All right, to start out the conversation then, we have quite a range of experience here, but I'd like to start out on the smaller side. Could you tell us a little bit about the differences between equity and non-equity fundraising and how you decide what's appropriate for your project?
Yeah, so that is always an interesting conversation with independent filmmakers. I've worked with a lot of first-time directors, a lot of smaller films, and then recently some bigger projects. And I think, I've also done a lot of crowdfunding. So I think whenever I'm working with a director or another producer or another project, I want to know what that project is going to do. I want to know where they see it going. If it's a passion project, they need to know how to define that up front, and they need to know how to say that and tell that to me. And then maybe we'll work on more of a marketing, local grassroots Kickstarter, crowdsourcing or non-equity campaign. If it is more of there's some cast attached or something like that, then we'll talk more about the equity route. But I'm sure Ted can speak to that a little bit more clearly than I do. I see myself as a connector between the creatives and the investors, and I like building those connections and creating the campaign or facilitating the project all the way through from beginning to end.
So I think on equity versus non-equity, I think Angie brings up a great point, which is it's really what's the purpose of your project, and there are some projects and there are many groups in Chicago which sort of champion philanthropy, and I think there's plenty of place for social justice documentaries, and the reality is they're not going to they're not going to provide great returns to investors, but they're important to make, and there's avenues to go down that. So I think it's very project specific. What we focus on in the Chicago Media Angels is commercially viable content, and we are looking for a return on investment. And so in our case, I think it depends on it very much project dependent on what the right structure is and what makes sense. But there could be a $5 to $10 million movie. If you're talking about sort of that range of independent film, I think it should not be relying entirely on equity. I mean, you need to have some other structure there. The flip side is if you're making a $500,000 movie, it's pretty difficult to really build out a sophisticated structure to that project, and that ultimately ends up being a pure equity play. I don't know if there's a right answer on all films. I think, again, it very much depends on a project-by-project basis to find out what makes the most sense. But I think equity plays a crucial role if there is a commercial viability of the project and the chance that the project is going to generate outsized returns. But equity investors this is a high risk thing for an equity investor to do. So if you can't offer them at least the opportunity for outsized returns, then it's not really going to work in the equity space. So again, it's very much project dependent where that makes most sense and what the right structure is.
So I look at it a little bit differently, because I've never produced a $500,000 movie. When I think of equity versus non-equity, I think of structure, kind of like what Ted was just talking about. Because if you look at the movies that we've done, they range from a couple $1 million to $40+ million. So if I'm the producer, like we almost had a studio deal at Universal. We could have had it, Warner Bros., whatever else. It didn't make sense because it wouldn't pay us enough if I had it myself, right? So at my company, the goal was to keep as much equity as possible, as many points possible in the film, so that I had as much upside and I owned the IP. So in that regard, I wanted to raise as least amount of cash as possible and leverage that movie, just like if you were trading, which is my background, so I understand it a little bit more than some other people. If you were trading stocks or commodities or whatever else, you want to leverage the heck out of that thing in order to get whatever type of return you can. And it's no different in the movie business. For us, we used to sit there and try to figure out, based on some concepts, whether it be simple concepts like foreign pre-sales, credit, currency risk, domestic, potentially as cherry on top, state subsidies, product integration, whatever it is, and try to sit there and get a bank or a private equity fund to loan us against that value, so a loan-to-value ratio that we would ultimately synthetically create, so we would own as much equity as possible. So if I was doing a movie for, let's say, $30 million, I would try to raise between 5 to 10 million and then leverage the balance to own as much equity. Therefore, when I sold it to a domestic, like Harvey Weinstein or whoever else, I was selling them the U.S. domestic rights. I would own foreign and then own whatever other content I could possibly own. Therefore, library value is worth a lot more to me in the long range, and then I could package the library value of different slates and then sell that to a private equity firm. So I look at it a little bit differently and more on an institutional level. That being said, that doesn't mean it's right or wrong. It's just the way I was brought up in the space. I think there's more opportunity in the smaller end of the budgets now, and that's what's exciting me about potentially what's happening here in Chicago.
Well, it was interesting. So I'm working on this project, whose name the director would kill me if I told you, but one day. I'm working on this project, and we're talking with a couple different distributors and production companies in LA, and we got into this really interesting conversation on how digital distribution has changed the game and how they're kind of realigning where the first money is coming from and where it's going to, and that's changing how they're structuring their films. So for this particular company we were talking with, they were talking a lot about how to them that under 600,000 range is of course not a lot of money in the scope of the film industry, because we have a skewed perception of what a lot of money is. But for them, that's the safest thing. They can guarantee that entirely.
Well, that's I agree. So if I knew I was doing a let's say $10 to $22 million budget, I knew right away I had coverage. I knew I was not going to lose money on that movie based on the put deals I was able to have over in Europe, domestically with Incubator, which was a nice little local distribution group, and then whatever else. And now, with digital content the way it is, I think you actually have to make them for a little bit lower money. But I think content is so important there in order to attract the right director and the right talent, that if you don't have that, then you're screwed either way. That's my personal opinion for whatever it is.
Yeah, I would agree with that.
Excuse me. I'm coming from the acting side, so I'm already lost when you say equity and non-equity. I'm thinking about union and non-union houses. I don't think that's what you're talking about, so could you just explain that a little bit?
Your turn, Ted.
No, so it's complicated, and think about it this way. So if you're gonna, if you're gonna make a $20 million movie, you're probably not gonna just take $20 million out of your bank account and go pay everybody, make a movie, and hope you sell it to somebody. The reality is, larger budget movies that have real talent attached, and this is when I met Bobby several years ago. Frankly, I learned a tremendous amount from him in 2 meetings he was willing to take, and this was one of the
I've
biggest
learned
things.
so much already.
Yeah. But one of the biggest things is if you've got real talent attached to your movie, and this is what Bobby did when he went to LA, is he said, I can, if you've got so-and-so and so-and-so in your movie, I can look at what the previous 10 movies that so-and-so and so-and-so were in, the box offices were X and X, and so we expect comparable box office on this project, and you can convince a bank to lend you money, and not for the whole $20 million, but maybe they'll give you $10 million. And their $10 million is going to be the first $10 million out of the back end of that movie, but they're going to get that $10 million. And the bank is going to charge you, in today's environment, which is different than when Bobby started, but today's environment, the interest rates are even lower. So the bank's not going to charge that much money for that $10 million. And that enables Bobby to put less money. He only has to cut a $10 million check to make that movie. So when it makes $100 million in the box office, he pays back the bank their 10, and he gets to keep a much bigger return on his 10 million versus if he put 20 million. And so when we talk about equity is the cash that's just totally at risk, whereas leverage is sort of the first money out, but they're getting a lower return for that money.
And I think you explained that perfectly. I'll take it one step simpler. I think I'll take it one step simpler. Who owns a house here? You guys have a mortgage? You're leveraged. You put cash down on that house. If the market goes south, you're losing your money. That's the reality. It's a mortgage. It's no different, but just a more complicated structure in the movie business, or in any other business for that matter. So you take your equity, your cash that you've saved for God knows how many years to buy that house, and you put it into the bank account, and then you go get a mortgage on that house. Well, it's no different with what we do in the movie business. We go get a mortgage. We just get a complicated mortgage, secondary mortgages, third mortgages, fourth mortgages, whatever mortgage we can get, and we play with somebody else's money.
Bobby likes leverage.
So
That's why Bobby has more money than anyone.
But to contrast that, so Angie, could you talk a little bit more about some of the other kinds of non-equity campaigns, like Kickstarter, or some? What are some of
the sleepless campaigns?
Yes. Tell us about what the non-equity campaigns.
But I did
do.
want to just touch on that question quickly and then follow up to it. I think, and Bobby was mentioning this earlier, that Chicago, specifically here in this city, the industry is growing. And Nicole back there, my lovely friend, who said to me, "This is the healthiest it's been in 20 years," and we believe that. But I think panels like this are here to help you guys and other filmmakers learn how to approach your film as a product that needs to be sold. It is no different than creating, like, I'm gonna create a new stick of deodorant. I mean, to make it in like the simplest terms, and you need to sell that stick of deodorant to a bunch of people. So
At the end of the day, it's a business.
it's a business. It is. It's the business of filmmaking, theoretically. All right. So in the Kickstarter,
Yes.
in the Kickstarter vein. So for me, whenever I've done a bunch of successful Kickstarter campaigns from $3,000 up to $75,000.
Could you talk a little about how Kickstarter works for people who don't know?
Yes. Okay. So Kickstarter is. How many of you know what Kickstarter is?
Oh, maybe that's not
Okay.
necessary.
No. I didn't mean that. I didn't mean that to sass you. I was just curious. Not sassing the moderator. So that's a crowdfunding campaign where your job is to incentivize people to give money, to donate their money for a campaign or for I don't know. Someone raised like thousands of dollars for like a sandwich. I mean, you can do it for other things other than movies. My only experience is in movies. But people donate their money, and then Kickstarter, Indiegogo is another one, takes a fee on the back end, and then they pay that, and they give that money back to you. And my experience with Kickstarter was, so in the Kickstarter Indiegogo world, and now there are others that are out there as well, Indiegogo, you don't have to reach your goal, but if you don't reach your goal, they'll take a higher percentage out of their fee on the back end. Kickstarter, you have to reach your goal or you get nothing. Now, when I'm approaching a Kickstarter campaign, I have the marketing plan and the reason why people are giving mapped out in my head before I start, right? Because the reason people are incentivized to donate for you is either it's your mom or your dad or your spouse or like your friend, okay? But there are only so many handfuls of people that can get to that point. But what is the message that your film is trying to say? We did one, we raised like 30 grand for a film that never ended up getting made, but that's okay, in Colorado called Dutchman's Run through a Kickstarter campaign. And that was at the point when they were lobbying to increase their tax incentive from 10 to 20%. So this was this whole grassroots, we did a big event fundraiser, but when we set that goal on Kickstarter, there was no way I was not gonna reach that. I had 30, between myself and the director and some other people, we had 30 grand sitting in the bank if we had to just finish out that Kickstarter campaign so we didn't lose the money, right? Because if you don't make your goal, you don't get anything. Now, I think it's really important, and then I'll let you guys talk, but I think it's really important when you're doing a crowdfunding campaign or a Kickstarter campaign to think of it in really small bits. It can be a lot to be like, oh, I need to raise like $70,000 on Kickstarter. That's a lot of money. It's like saying, you know, I need to build Fort Knox Studios, but not thinking about the size of the rehearsal room, right? So what I do is I make a list of all of the people I know who will give me $10, and all of the people I know who will give me $50, and all of the people I know who will give me $1,000, and I write those names down, and I send them personalized emails to donate to Kickstarter. And that always works for me. That has always worked for me. Now, if they'll give you the money without going through a crowdfunding campaign so you can avoid that 7 to 9% fee on the back end, then just take the check. But I think it's also a marketing. You also have to have your marketing together.
So I'd real quickly jump in here and then, so to come back to Elaine's question, I think a key point is like a Kickstarter or an Indiegogo is a donation versus an equity investor who's going to have some ownership in your film, which theoretically gives them some control rights, and then also, more importantly, they have some interest in the back end profits. Whereas if you contribute to Kickstarter, you don't expect to get checks later if the movie does really well.
Don't you get a coffee cup?
You do get a coffee cup or an
t-shirt.
experience or a t-shirt or a hat. T-shirts are a bad idea, by the way, because you have to figure out sizes, whereas hats are much better. But I think of Kickstarter, Indiegogo less as a source of capital for a film, less as a financing tool, and much more so as a marketing tool and a way to build an audience. And so when I meet with inevitably filmmakers, very few of them raise enough money to make the whole movie on Kickstarter. But that doesn't mean I would discourage you from doing a Kickstarter campaign. I think that's a great way to go out there and build an audience and have a couple hundred people or a couple thousand people say, listen, I want to see your movie. And that helps you raise equity money down the road. Not only is it free cash that those investors can leverage, that's the best kind of leverage for Bobby, you don't have to pay them back. But it's also people who are probably going to pay $10 to go see your movie someday, and so that's a great thing to have. But I think of it as a marketing campaign. So when I talk to people who are pitching me for a movie to raise money, I'm not interested in how much money they raised in their Kickstarter campaign. I'm interested in how many people contributed and how viral that campaign went. If you have a buddy who's got 50 grand and he put 50 grand in your Kickstarter campaign to help you get to your goal, I mean, so what? That doesn't really mean that much. I mean, it's $50,000 of free money. That's great. But yeah, and that's a fair point. 7 and 12% is less than the 20% I'm going to pay the equity investor, and it's less than the 8 to 10% I'm going to pay bank by the end of the day. But still, great point, Nicole. It's not totally free. I would say though, if you do have people who are just going to donate money to your movie, I would tell them to do it through the Kickstarter campaign, and I would give them the 5%. By the way, there's some people here who run some other crowdfunding services that don't charge the 7 or 10%. So there are options. I don't view that as a real financing source. I think, again, when I think about content, I think of it as a commercial investment. It's an investment, and you want a return on it, and that's the difference between equity or crowdfunding capital.
I have no comment on crowdfunding. I've never done it. I know about it, but I wouldn't even know what website to go to. So.
What do you think of Super Troopers?
The movie?
No, the crowdfunding campaign for Super Troopers 2.
But once again, I don't know about crowdfunding.
So
But I do agree that I think it's a great tool.
Super Troopers 2, I just as a quick anecdote, I think that's obviously it's a sequel to a successful film. It's going to get made in Bobby's world. You could finance that movie, but they raised $5 million on Kickstarter or Indiegogo or wherever they were, and $5 million is real money for everybody.
That's the Broken Lizard Group.
Yeah, that's exactly right. But it's also a re-up from all of their fans. It's a way for their super fan to say, listen, I really want to see this movie before you even made the movie. And I think that's, again, I think it's phenomenal marketing, and yeah, you get some free money out of it. But I don't view it as a financing vehicle. I view it as a part of your marketing campaign.
And that movie most likely, just thinking about it, right, because its audience is somewhat limited, its overseas sales are going to be limited, whatever else, that's probably a great digital content movie where for $5 million, you're going to make a lot of money on that if you wind up doing some type of digital play on that. Versus going out theatrically where you're going to have to do $22 million in P&A or whatever the number is, and you're going to have to be paying some type of distribution fee. Owning that IP is, once again, where intellectual property is where that seems like a nice play for me.